Hello and welcome back to another episode of Fund Friday with a very special guest here, a recurring guest, but also now officially an author. We've got our incredible investor relations director here, Dasha Beardsley. How are you today?
I'm doing great. Thank you for having me on again.
Yes, and congratulations on publishing your book. I believe you published it at the end of March. Is that correct? The official date may be the 31st, if there even is 31 days in that month.
No, my official deadline was April 1st, but Amazon Publishing gave me a hard time, so it actually came out officially, I think, April 3rd.
Okay, very good. Well,
So it's very
congratulations.
fresh.
Yeah, so we're gonna get right into that book. It's something very niche down to something near and dear to Dasha's heart. One thing she loves so much, which is 1031 exchanges. So, as you know, if you work with Lone Star Capital and you tell me of a 1031 exchange, I say, great. Now here's Dasha, because although I'm, loosely fluent in that language, she is the professor of it. So we're super excited to connect on that topic there. But before we get into it, of course, Dasha does way more than just 1031 exchanges. She's got her hands in so many cookie jars. But one thing I want to promote here will be our New York City Flagship Summit event. This will be the fifth edition of this, the fifth iteration. And I'm very confident this will be the best version of the event yet. So without further ado, Dasha, you and I have been spearheading it. And, by you and I mean mostly you. I've just been adding my help here and there, kind of getting messaging out and kind of start sending it out to individuals, sending the official first wave invites and stuff. But that said, can you talk about briefly the summit event, who's it for this year, the dates, things of that nature, and how this one will be the best yet and actually a skosh different than years prior?
The summit is for multifamily professionals and in general commercial real estate professionals. So whether that be equity providers, anywhere from high net worth individuals to fund managers to private equity firms to family offices, there's a wide range of high level equity providers at this event. And I would say, dare I say, it has the highest ratio of equity to sponsor ratio at any event that we've ever been to, that's for sure. But I would also say probably for the industry in general. Um, and then on the other end of it, we're matching basically equity with other multifamily sponsors, but also we're open to having other commercial real estate professionals and owner operators, whether it be oil and gas or self storage. So it's really not just a multifamily event, but also just a commercial real estate event. So we're super excited about that. I would say this year it's going to be bigger. We've already had a great turnout, and it's only April, and the event is September 14th to the
Yeah,
15th.
I think we have already what over 50 people who have RSVP'd and almost every sponsorship sold at this point. Maybe there's one or two available if you want to plug those opportunities out there for people.
Yeah, absolutely. If you're interested in joining, you can always contact us at ir@lscre, or you can fill out the actual application on the website www.lscsummit.com. You can also fill out a sponsorship interest form there. So yeah, I would say the way that this event is going to be better than previous years, even the first one, which honestly that was in 2021. Rob and I are kind of embarrassed even thinking about it, just it wasn't as professional as from where we're at now. But even that one had really fantastic reviews and people had a really good time and found a lot of value from that event. I would say mostly because of who was there. It's all about the room. Obviously we pride ourselves on having a super high level experience, with great dinners, cigars, whiskey, jazz, the whole works. But really, the value comes from the people that are in the room. And so, we're more confident than ever in the quality of the room that's going to be there this year. So while obviously all the fun, fancy stuff is going to be even better this year than all the previous years, the room is also going to be better.
Yeah, I'll interject here. So we obviously, in traditional Lone Star Capital fashion, are going to wine and dine you to the nines, with no expense spared there, no detail spared, with live jazz, with potentially other fun additions throughout
Musician.
the. Exactly, I didn't want to say that, but you tipped it off. The perfect little magician going out there, not a musician, but a magician out there, um, going around and kind of giving you some eyes or something, some sight for the eye to kind of feast on there, if you will. That'd be super fun. But you mentioned the room and kind of gatekeeping that, and I really want to harp on this once more. Funny enough, we were on a conversation, you, myself, and Rob yesterday, and we were going through some of the applications. And I think a lot of events, they'll just take your money, and there's nothing wrong with that. Like a lot of people say, hey, more is more, bigger is better. And I can for sure see the value of that, not diminishing any of that value whatsoever. But our event, who's in the room and who's there is super important to us. We'd rather have it be 60 people of the best people versus 1,000 people where you may not actually get one contact. And at our event, you actually really do get the opportunity to connect with everyone who's in the room because of the intimate size of it. This year, I believe we're going to have a hard cap at about 150 people. I believe we're going to get to that number or very close to it. But yeah, so not everyone gets to go to the event. Unfortunately, there was a couple of applications that we did not think would be a perfect fit for our event, so we actually declined their ability to buy, a not so cheap ticket there. So we really value who comes, and we want to make sure that we put them in the right situation to succeed and get context there. We do hand-selected speed networking to help aim your business to, whether it be looking for debt, whether it be looking for equity, whether it be looking for sponsors, or just to meet other like-minded individuals. We know everyone kind of who's in that room, and the power is the fact that we know what they're looking for, and it's so curated. So this is a very much so a vetted environment. It's a jam-packed day and a half event. We're going to get a lot of value out of it. So we kind of think, particularly if you're a sponsor, you'd be the biggest fool to not come to it, assuming you get through the rigorous gatekeeping that Rob and Dasha keep, of course, on this event. But this event, I think the attendance and people RSVPing so quickly goes to show the sign of the times in the marketplace, which is really putting a high emphasis and value on relationships and doing deals. And we truly and humbly believe that due to the fact that the market is more difficult right now, people are reinvesting their time into meeting new sponsors, meeting new equity people. So because of that, we think that the demand has been so strong. So we're really excited about that. But as I said, the Summit event, September 14th and 15th, you should really be there. Reach out to us. You know where to find us. In regard to that event there, you can also go to our website and apply to potentially come. With that said, let's get into the show, which is, why we're here and talking today. Dasha just published a book. The title of the book is Maximizing Wealth Through Syndicated 1031 Exchanges. Is that correct?
Yep.
Excellent. So let's just get right into that. What is the book about and who's it for?
Yeah, so originally my goal was to just write an A to Z type of book for 1031 exchanges, but as I was writing it and I made the decision actually to change the title pretty late into the process because a lot of my focus was specifically on 1031 exchanging into syndications, which also ties more directly to my why, like why I wrote the book. And a lot of the reason why I wrote the book is because a lot of people don't know that this is actually an option. They have been 1031 exchanging for many years from, a duplex or, an office space or some retail, and they've all been managing it themselves, which can be a fantastic way to grow wealth. So that's not an all a knock on, direct ownership or, managing properties yourself. But a lot of people have no idea. I talk to investors all the time. Once they hear that this is an option, they're super excited and had no idea that you could actually do this. You could 1031 exchange into a syndicated project like, the 300 unit apartment complexes that we buy in Texas. So I would say that's really my why, is that I think that it's a fantastic option for people that they don't know about.
And would you say the who on for who the book is for is for potentially, investors who have kind of started small, maybe be a single family home to a fourplex to a 10 unit, something like that, who are kind of just over the process of being hands on and managing it? Would you say it's a fair who, just a sophisticated and savvy high net worth individual?
Yeah, I would say, I mean, that's a big part of my target audience, but I think honestly, anyone who's looking to be a passive investor could also benefit from this book because I talk a lot about syndication to syndication exchanges as well, which is something that we offer, which we'll talk a little bit more on this episode, but it's not necessarily, an investor selling their own property and then investing into a syndication of ours, you can actually, in certain cases, invest into a syndication. And if the sponsor offers the option to roll over the proceeds into a new deal via 1031 exchange, that is also an option. So I think it's really important for investors to know, whether it be property owners or just someone looking to get into passive investing, to understand what this opportunity is and what 1031 exchanges can do for them in growing their wealth over time, because it also can affect who you want to work with and who you want to place your passive dollars with. If you're interested in doing a 1031 exchange on the back end, but the sponsor that you're working with doesn't historically do that, or that's not something that they generally offer, that might sway your decision making. So it's good to be informed, um, just generally speaking, if because this is such a fantastic way to compound your wealth and to defer taxes, that it's worth considering.
Yeah, I think that's really well said. And Dasha, I think we take for granted how much we leverage, we harp on this, but it can't be said enough. And I think sometimes hitting the basics over and over and over again are super important things, because depending on who you are, this might not be such a basic concept to you. And one of the reasons is because, well, we kind of play in a space where not everyone does the exact same thing, not everyone has the same capabilities. So, Dasha, for us and for many of our investors, it sounds so basic, but does every syndicator take 1031 exchange dollars into their deals?
Definitely not. But also surprisingly, our 1031 exchange minimum is significantly higher than our regular, just like LP interest minimum. That would just be, a typical syndication deal that we're doing and just going in as an limited partner investor. So our 1031 exchange minimum is significantly higher than our regular minimum. But from the sponsors that I've seen that actually do accept 1031 exchange funds, their 1031 exchange minimum is significantly higher than ours. And these are also sponsors that are potentially smaller than us as well. So it what I gather from that is that, generally speaking, sponsors are not excited to accept 1031 exchange funds, with their increased minimum, and also the fact that a lot of them don't offer that, or don't accept 1031 exchanges. It just kind of shows to me that it's it's let me start over. um it shows to me that a lot of sponsors are actually not that excited to accept 1031 exchange funds due to its additional complexity.
Yeah, no, it's a lot more to take, and that's why you have options in the marketplace. You've got multiple arenas and people to choose from. That's the beautiful thing about the country we live in, a capitalistic society. Everyone kind of chooses different avenues here to work with. But as you mentioned, I really love that you hit this. Not only do we take 1031 exchanges, let's say if you've got $1 million and more, and the debt and equity structuring is compatible to go into one of our deals, and assuming it's not an affordable structure deal, and you're ready to look for to exchange an opportunity, you have that option. But also when you go full cycle with us, let's say if you invested $100,000, you're really happy with the service, and now you've got $200,000 that you want to roll to the next deal. Dasha, do we do 1031 exchanges from deal A to deal B from a Lone Star perspective? Okay.
Yes, we do offer syndication to syndication 1031 exchanges. So that's a super great benefit to investors. Like you said, they're happy with their investment, but now they have all this capital gain. What are they going to do with it? And in their mind, they probably want to just reinvest it anyway somewhere. So might as well do it in a tax advantage structure. And, we hope to just continue doing those 1031 exchanges from syndication to syndication, and we plan on being in business, for our lifetimes. So it provides a good long-term solution to investors.
The beautiful thing about that statement is for a lifetime means a little bit more, seeing is that we're not 60 years old, with all due respect to those who are 60 years old. I'm just 30, and Dasha is quite a bit younger than that. And Rob's a couple years younger than me. So the nucleus of the team is, I guess you could say, a skosh on the younger side of things. So when we say lifetime, we do mean probably your lifetime, hopefully, as an investor who might be in their 40s plus, or even some of our younger people, right? You can kind of grow rich and wise with us, with hopefully many, many deals beyond there. And I think one massive benefit you get from the syndicated perspective, if you're not 1031 exchanging and from your own deal to our deal, but let's just say you're placing, X amount of dollars with our opportunity, you can't 1031 exchange S&P 500 stock into Apple stock. You've got to sell, you got to pay the taxes, and you got to reinvest. And that's fine and all, but that's kind of one of the beautiful things about what we do. So with that said, uh, sorry, one second. With that said, in your view, what makes syndicated 1031 exchanges such a powerful wealth building tool, especially for passive investors?
Yeah, so I think that it really offers at the bare minimum, it offers a sort of backup opportunity for investors who, own property directly. Um, if let's just say you only have a couple more weeks to identify a new property to a 1031 exchange, having contacts with sponsors like Lone Star Capital who do deals regularly can provide a really great kind of last minute option to satisfy your exchange. Aside from that, for just truly passive investors, 1031 exchanges, and I actually have a chart that's in my book that shows the difference between, investing. If let's just say you were starting with the same $100,000 and you're investing over 30 years, that 100,000, if you are paying taxes in between each deal and not doing a 1031 exchange, the approximation is that that would be worth 1.1 million. And but if you're doing 1031 exchanges and deferring those taxes all the way for those 30 years, your 100,000 would turn into 2.9 million. So that really, obviously 30 years is a long time, but and market conditions change. You could hit a home run, or your deal could not do as well. But just if you're averaging it out over 30 years, that's a huge difference. That's almost double the amount of wealth that you've accumulated, due to that kind of compounding nature, and you're not having to you're not you don't have any tax drag. So I think it's a great 1031 exchanges are just incredible for any investor, whether they're passive or not. But it's very cool that passive investors can also partake in this, because I think historically, when people, even experienced real estate investors who have done many 1031 exchanges themselves or own lots of property, a lot of them don't know that this is an option.
Absolutely. What are some of the misconceptions people might have about 1031 exchanges that you address in your book?
I think one of the when it's specific to syndicated 1031 exchanges, let's just say an investor does know that they exist. A lot of the times they only think that DSTs exist, so that's a Delaware statutory trust, and that those are structured very differently from the way that we do 1031 exchanges at Lone Star Capital. And I would say that um, a lot of the sponsors around our size who do accept 1031s do structure them differently, in a TIC, a tenancy in common structure. With a DST, I think that those can be great options, but for multiple reasons, we've chosen not to do that structure. Um, Partly being that there is much stricter regulations on when you need to sell. So let's just say we were to open up a DST and to do a deal within the DST structure. We would from the outset have to decide when we're going to sell the property, and there's no flexibility around that. There's also no capability of making a capital call. That's completely against the rules. And so, while we don't plan on making any capital calls and we haven't before, um, the ability to do that within your offering docs does allow you to, structure the deal more optimally. So if we're not able to ever do a capital call, and we know that that's not a possibility at all, sponsors then leverage do very low leverage on their deals, on their DST deals. And so that also is just not a very efficient way. They also end up raising a lot of extra money for reserves just in case. And so it's just not an efficient way to be investing your money. Um, so there's a few other reasons, but I would say some of the reasons why investors who would potentially be looking to do a syndicated 1031 exchange, they might be thinking that DSTs are the only other option, which may not be very attractive to them. There's absolutely no control, and it's usually a much bigger syndication. So just might not be very attractive to someone who's used to owning property directly. And I think tenancy and common structure is something in between where you can invest with a smaller sponsor where you have like us, for example, of course, where you have a much more direct relationship with the people owning and operating the property, but yet you still have that sort of passive nature to your investment.
Absolutely. So, how does a properly structured 1031 exchange help with wealth preservation? This might seem so obvious to us, but for those who maybe are not 100% and they just think we're throwing around four numbers that create 1031 exchange, or maybe think we're talking about Halloween, National 1031 Exchange Day, they may not be privy to the benefits though. But can you just once more touch on how does a properly structured 1031 exchange help wealth preservation?
Yeah. So for let's just say you have $1 million property that you're selling, and there's $200,000 of taxable gain. So there's capital gains, $200,000, and the let's just say only 40% of that is actually what you're going to be paying in taxes. So 40,000 out of the 200,000. If you were to just take that money, right, then now you have $960,000 to play with. Versus if you do a 1031 exchange and you're able to just exchange the property into another and reinvest, you're able to reinvest in your entire $1 million. Obviously, that's a simplified example with no closing costs and things like that, but you're able to actually get more yield based on the fact that you're investing more money into the next deal. So that's in a simple kind of like in a vacuum. That's how that works. There's no tax drag on your investment, and you can keep doing them on forever until you inevitably pass. And one of the best benefits is that you, upon passing, your heirs get the stepped up basis. So all of those previous capital gains tax that you've accumulated through potentially 40 years of doing exchanges, those all go away.
So what you're telling me is that the only benefit of death is that your 1031 exchanges don't have phantom income or anything of that nature that they get to pay for. Now that is the only cool thing about the grave, in my opinion. So with that said, you've executed many 1031 exchanges with us alongside the team here. Can you share any examples or stories where someone greatly benefited from a syndicated 1031 exchange with us? Or, maybe whether it be going from deal A to deal B with us, or basically getting kind of at the 11th hour, working with us in a deal when they thought they may have to pay a pretty large bill?
Yeah, I would say actually, one of our largest investors, he invested with us very quickly and in a large amount because of a 1031 exchange that he was running out of time to complete. So while obviously that was a fantastic benefit to us, where we got a lot of equity out of the situation and probably on a much quicker timeline than we would have normally, for that amount of funds. But we also on his end, he was actually able to efficiently and smoothly place those dollars that would have otherwise been taxed, and he's been doing 1031 exchanges for like I think multiple decades. So yeah, I think in those types of situations, it's a fantastic service to be able to give to investors, because it's a significant amount of money that they could be owing in taxes.
Absolutely. I mean, we're talking about particularly now too with how 100% bonus depreciation works and things of that nature. If you've done that a couple of times, the I guess clawback might be the right phrase for it. I'm not exactly
Or
sure.
depreciation recapture.
Exactly. Thank you so much. The depreciation. See, it's almost like you wrote the book on it. Oh wait, the depreciation recapture can be quite punitive in many situations. So just realize that if you're kind of eluding a lot of capital gains taxes by way of creating a big paper loss there, right, and deferring your taxes, that will come to be paid out at some point. So there's no forever way of avoiding that, unless, of course, you pass away, which would be unfortunate. But as you mentioned, at least your heirs will receive a property with no of your phantom income there that you own on it. With that said, for passive investors with properties they're selling, how can they move that equity into a deal that we're syndicating?
Yeah, so the first step, I mean, it's great to just reach out to us and see kind of what our deal flow is looking like. But a lot of the times, the sale doesn't come before the replacement property is identified. So, obviously, investors kind of pick a time when they want to sell, and then they kind of figure out the replacement after. While I think that strategy makes sense, in theory, it's always good to prepare as much as possible and try to figure out what types of options at least that you have, and what sponsors you might feel comfortable with, and how that structure works. So as far as that, prior to, or sorry, after, um, there's a deal that we have identified that you'd like to 1031 exchange into. The process is actually pretty simple on the investor's end. They would have to just put in contact their qualified intermediary, which, by the way, if you're looking to do a 1031 exchange and it's your first time, um, looking into 1031 or qualified intermediaries as soon as possible, and definitely prior to your sale. That is something I've talked to actually many investors, and they're like, oh, yeah, I'm planning on 1031 exchanging, but they don't have a 1031 yet. Or sorry, I
A
keep saying
QI.
that. They don't have a qualified intermediary yet.
Mhm.
Um, which is obviously very concerning, because if you end up selling your property without a qualified intermediary already involved, and taking receipt of the sale proceeds, your exchange is disqualified. You're not able to do it. So, step one really is identifying and working with a qualified intermediary and getting that all set up. From there, when working with us, it's pretty simple. We will need some various documentation, like your schedule of real estate owned, driver's license, things like that, for the lender that we're working with to do some due diligence. Um, but it's really honestly not too much work on the investor's end at all. And a lot of the communication is between myself and your qualified intermediary.
So that's such an awesome thing. And it's funny. It's like you're foreshadowing my next question roughly there. And I think you kind of covered some of it. But is there any other legal or logistical steps that someone needs to take in order to 1031 exchange into one of our deals?
It's mainly getting a qualified intermediary. Um, Knowing the legality and the rules around a 1031 exchange is super important. But if you pick a good qualified intermediary, they aren't there just to facilitate the exchange, but also to help guide you. I think having, a financial advisor would also be super helpful, or, if you have an attorney on your team. But a good qualified intermediary will kind of hold your hand through the process, and make it make it much more make it less confusing.
Yeah. Obviously, if you own, let's just say, like kind property, as they call it, if you own, multifamily units, if you own rental homes, Airbnb, something of that nature, you're smart, you're sophisticated, you're wise enough to 1031 exchange, and you've done it yourself the whole time. So now, when you consider maybe deferring it or getting into a different asset class, or maybe you've done, a 40 unit yourself and you're ready to kind of go into more of an institutional size deal, one of ours, which will likely be 35 plus million in deal size, 200 plus units in Texas, right? Um, what is different, I guess, than the traditional route of 1031 exchanging to your own rental property? Like, what benefits do you get? How do we differ than kind of doing it yourself?
Yeah, I would say the your ability to diversify is a lot smaller when you're doing it yourself, right? So, I mean, really depends on the investor and the situation, but kind of generally speaking, and individuals who own properties, it's probably, a fourplex or a duplex or something of that sort, or, maybe a few retail stores or a strip. But there isn't really that many like scales of economy with those size of property. If the plumbing goes out in one of your two duplexes, right? That's a huge problem. That's half of your potential income at risk. And then also, of course, there's the costs associated with fixing, major repairs that may come up. So a lot of the times with a smaller property, the risks are kind of more binary. With a larger property, that is being managed by a property management company, or with us, we're vertically integrated, so our in-house property management team would be managing. There's scales of economy. There's 300 units that are being managed, that are owned and managed, and so owning a small portion of that is inherently less risky, just because you're diversified over many apartment units rather than one or two, that you would maybe own yourself directly. And then, I mean, aside from that benefit from the scales of economy, and also not the main benefit, the other main benefit would be not actually having to manage the property yourself and not have to worry about that.
Yeah, and I just want to harp on this once more. The value with working with us, of course, is what you just mentioned. But going above and beyond that, knowing that we're going to put the best debt and equity structure together here, we're sifting through the market. We are pros. We do this all day long. Our entire focus is making sure that we buy the best investments and it's the best ran. You get the best servicing. So you're getting the entire Lone Star Capital team. You're getting a firm that has $700 million plus in assets under management here to work with you and to help you and to basically make sure that you have a good opportunity in a very, very competitive, difficult, and hard to navigate land space, generally speaking. That said, what should passive investors be looking out for when they're making a 1031 exchange decision pertaining to sponsors? Obviously, this is a business. This part of it specifically is very sensitive. So choosing the right team here, even more so probably on the 1031 exchange side, if you're selling a property, is maybe more important than the sponsor you'd pick if you're just making typical LP, limited partner passive investment. But what should people be looking out for if they're looking to choose a sponsor, selling their own deal to going into another sponsors?
Yeah. I think one thing that we haven't really talked about is transactability. So when you identify a property and you decide that that's the property that you want to exchange into, right, you're largely at the mercy of the sponsor to actually close on that property. Of course, there's, you can identify multiple properties, but there's limits. Most people identify three. There's alternative rules that enable you to identify more properties, but there's some downsides to those as well. But let's just say, like most people, they identify three properties, but really your eggs are kind of in one basket. You're banking on exchanging into one property. With you want to try to evaluate as much as possible how transactable this sponsor is and what's their feasibility of raising the remaining equity and actually able to close on the deal, because that's probably one of the most number one ways um, to
Have a
have your
shortfall and a shortfall. Yeah, exactly. I mean,
exchange fall through.
yeah, I mean, there's a lot of groups right now, particularly in this moment of the cycle. We're recording this, hopefully this is an evergreen episode here. But we're talking about a time that's very difficult to have people raise. And we've never fallen short on a raise before. We've never had equity be the remaining or the reason why we don't close. We haven't really sneakily put in a bizarre or weird pref structure into a deal at last minute. You hear a lot of horror stories, unfortunately, that really affect your investments. So particularly with something like this, you need surgical precision. And I'm confident that our team at Lone Star Capital, with the amount that we've done before and our transparency and how we work with our legal teams, will be able to help you navigate through that process there, which is super great. So thank you so much for mentioning those important options there, or items there. And then, well, Dasha, thank you so much for being such a awesome guest here. Naturally, people are going to have questions. They want to know about this. They want to know about you. They want to know how they can work with us. But let's say someone's early on in the process and maybe they're 2 years away, a year away. They've got a maturity coming up of sorts. How can people reach out to us and reach out to you to learn more about yourself? Grab a copy of your book. Can you kind of hit us with all those items there so that
Yeah.
people can find you?
So for deal flow, for anything related to investing with us, you can reach out to us at ir@lscre.com. That it will reach both Craig and myself, and so we handle those communications as appropriate. Um, for getting my book, that is maximizing1031.com. And as far as keeping up with us, you can also subscribe to our newsletter where we, share all the updates with Lone Star and provide also educational materials. And you can sign up for that on our website, which is lscre.com.
Excellent. Dasha, thank you so much for being such a great guest here today. Congratulations on the book. We look forward to having a hard copy of that soon in my hands. It still hasn't came in the mail yet, but we're super excited about that. Hopefully, we'll be doing an audible version of it so the dyslexic readers like myself can consume the book in a timely fashion where we don't have to read the same sentence and paragraph 3 times over again because our mind drifts because we also have ADD. But with that said, hopefully that version will be coming. Dasha, thank you so much for being such a great guest. We look forward to having you promote that book, going on the tour there and seeing all that good that comes from it. Dasha, thank you so much for coming on, for helping all of our investors with all sorts of investor relation needs for 1031 exchanges and stuff. Everyone, when I think about 1031 exchanges, Dasha is the first person I think about. I always defer them to her. So her email is dasha@lscre.com, or you can reach us both at ir@lscre.com for all your 1031 exchange needs, for all your investment needs. We're here to help you. We're here to serve you. Thank you so much for your time today, and we will see you next week.
Thank you.